Hey everybody, what's going on? It's James here with Crypto Common Sense, aka Three Peaks Trading, and in this video I'm going to quickly walk through how you can use relative strength to your benefit. Before I jump into the content, please do me a huge favor, hit the thumbs up button now and make sure to subscribe to the channel. Of course, the more interaction that I get on these videos, the more content that I'm going to create. So let's jump right into this topic. Relative strength, what is it and how do you use it? Well, I say relative strength and some traders are going to be confused and think that I'm referring to relative strength index or RSI. This has nothing to do with RSI. When we take a look at relative strength, what we're doing is measuring the strength of one asset versus another. And in most cases, it makes the most sense to try to find an asset within an index or within a sector and then compare that asset to the sector as a whole. This is not a new concept. It's not something that I came up with. It's not something that anybody recently came up with. Way back, 100 years ago when Richard Wyckoff was coming out with his Wyckoff distribution and accumulation and Wyckoff theory, one of the things that he talked about was measuring the strength of an asset versus the market. If we want an asset to be an accumulation, we want to see that asset stronger than the market as a whole. And if an asset is in distribution, then obviously we're going to notice that that asset is weaker than the market as a whole. And probably the most famous chart of mine personally where this came into play was, in late 2021 when I posted this chart, this Bitcoin versus QQQ chart. And if you remember back at that time, a lot of people were still very, very bullish on Bitcoin. Some people who disagreed with my analysis tried to point to the fact that there were higher highs on price and that, that was not bearish in nature. But what they refused to recognize, and even when I explained it to them, refused to acknowledge, is there was a higher high on price in fiat, so Bitcoin versus US dollars, but there was actually a lower high in price versus QQQ, which was the tech market, if you will. And so what you actually had there was a textbook example of bearish divergence. The Bitcoin was not as strong as it was portraying. And of course, just like I predicted, that was indeed complacency, and we went into a bear market thereafter, and Bitcoin proceeded to fall over 70%. Now, this isn't about this specific chart, although I will point out real quickly, since I have the chart up and I don't want anybody to get confused, I still think there's two possibilities in this chart. I think this is one possibility, where this is anger, which is the way I have it mocked up. I also think that bulls could make a case that anger may have been back here, and that this was actually our depression dump, and that this is our disbelief rally, making this our disbelief correction, if you will. And if this is the disbelief correction, then we'd be right about here on this chart, meaning we're about to start a new bull market. If this is indeed anger, then of course we're probably somewhere in this area through here. Either way, I think long-term Bitcoin hodlers at the prices of Bitcoin today, I think there's probably a good chance that they will come out ahead if they hold long enough. They just may experience some short-term, some negative loss, or whatever you want to call it, temporary loss, paper loss, unrealized loss, whatever. Okay, so me personally, I'm not, a big Bitcoin fan, so I'm not loading up or anything, but I think we are getting toward the end of this bear market. So let's talk about other charts, and let's look at some things that we can do when we're trading assets to kind of get an idea. So anytime you're trading an altcoin, I'm going to jump into a different chart. Anytime you're trading an altcoin, what you want to do is you want to look at an altcoin versus, Bitcoin. Because in the world of cryptocurrency, Bitcoin is king. And so if you look at an altcoin, let's just, any random altcoin, we'll say Litecoin. If you look at it versus USD, it's okay to use that chart. It's not that it's a terrible idea. You can certainly use it versus US dollars, and you can find entries and things like that. But you'll get more information if you look at Litecoin versus Bitcoin. Okay, because then you're going to see how strong Litecoin really is versus the market. And if you think about this, a lot of people don't seem to understand this, but if you're investing in Litecoin, let's say you invested in Litecoin right here, okay? And let's just say hypothetically that at that point Litecoin was $50, okay? And let's say today Litecoin's $100, which it's not, but let's just pretend, okay? Say it's $100. Some people will look at that and say, see, it was a good investment. I've doubled my money, but you didn't. It's not a good investment. Sure, you doubled your fiat, but you could have put that fiat into Bitcoin and Bitcoin would have gained more value. Litecoin lost ground versus Bitcoin. And so, especially in a bull market, you see this a lot where people are bragging about gains on altcoins. And it's like, yeah, but you're underperforming the market. You would have made more money just holding Bitcoin. And I'm not saying that about every single alt, but there's a lot of cases where I see that where people think, oh, look at what a genius I am. And they're not, okay? We want to be using relative strength charts when we're trading. Even on smaller time frames, it's actually very, very effective. I'll talk about that as well. But especially on larger time frames. If you're planning to hold a position for months, weeks, months, maybe even years, you want to be looking at relative strength. So in the case of the crypto market, you want to be looking at coins and tokens versus Bitcoin. Or for example, when the pancake swaps were really, really hot, you wanted to be looking at the value of those tokens versus BNB because that's what they were traded in. And this same concept applies to the stock market. If we take a look, for example, on NVIDIA, you'll see some really neat stuff here. So this is an NVIDIA chart. We're going to look at, on the left-hand side, we'll make this a 3-month chart of NVIDIA. This is NVIDIA versus US dollars. And then what I'm going to do is on the right-hand side, I'm going to actually put NVIDIA, so NVDA, and I'm going to divide it by the QQQ, which is the ETF for tech stocks, okay? So I get something that looks like this. And we'll put that on 3 months as well. So both sides, 3-month candlesticks, okay? I'm going to put them both on log chart just because it makes it a little bit easier to see. Okay, that's the only reason I'm doing that. So here is our NVIDIA chart on the left versus US dollars. Here's our NVIDIA chart versus relative strength on the right. So let's say that in 2016, you wanted to get bullish on NVIDIA when it broke this all-time high. Well, the most common way for traders to get long is they look for a breakout and they look for a retest of what used to be resistance and is now going to hopefully flip to support. Very, very common practice. The problem with NVIDIA is because it was so parabolic versus US dollars, it never retested the level. It just went straight up. And so there is no pullback for traders to get involved on if they're looking at a USD chart. But if a trader was measuring NVIDIA versus the strength of the overall market, we knew in 2016 that the tech market, all markets were still in a bull market. So it stands to reason that if an asset is stronger than a bull market, it should go up, right? Okay. We measure from the all-time high, same place, right? 07's all-time high. It breaks out here, and right here it retested that all-time high. So you can see it if we zoom in how perfectly it retested it, even left that tail behind, okay? There was absolutely a reason somebody might have wanted to get long or buy calls on NVIDIA at this point in time. But at the same point in time on a USD chart was showing nothing. It was just showing this little, spinning top candle basically, inside bar kind of candle. Which, you could find other reasons. I'm not saying it was impossible to get long. I'm saying that this makes it obvious to get long. Same thing here when it pulled back. It pulled back kind of in the middle of nowhere. It wasn't a good Fibonacci retracement. It wasn't to a previous support level. It was just kind of a weird pullback. Maybe a little bit of support through here, but it would have been a tough trade to take versus US dollars. But if you see this and then you go over here and you realize, hey, I'm pulling back to that level of support again, makes it far easier to trade that. How many times, if you've watched my videos, have you seen me do this? I use the tails, I draw these little boxes, I call them demand boxes, and I will pull them over. And oftentimes, and my students all know this, I'm looking for trades off of supply boxes and demand boxes. So bam, it hits this box. That's a trade for me. That is a long position for me. But if I'm looking at US dollars, the trade does not exist. Okay? So I use this chart instead to look for those positions. And then up it went. Same thing here. This pullback, nowhere near the last high. But if we take a look at the relative strength chart, here's our high right up here. We pulled over, it broke out. And just like a textbook trend, retraced right back to it. Again, if we look over here, there was no retracement to that support level. So again, easy place to look for bullish positions on that stock. Up it goes, okay? Same thing here. This one actually pulled back on both US dollars. boom, pull back to it, and pull back on the relative strength chart, okay? But you can use this to find areas of support and resistance that are not immediately obvious versus fiat. That's one way to use it. Another way to use it is to look for, retracements and things like that. A third way to use it is to look for divergences. For example, if we start seeing divergences where NVIDIA is, putting in lower highs versus QQQ, but higher highs versus US dollars, that's probably a sign that, that stock may be about to turn the corner. So I could go on and on for hours about relative strength. This is probably one of my favorite strategies, but the main point that I want to leave you with is this does work in every time frame. This is obviously a macro time frame using 3-month candlesticks, but if you were trading, for example, a 5-minute chart, you're day trading, for example, and a stock, puts in a long setup, it's always a good idea to check that stock versus the index, because the index may be looking bad, and if that index dumps, it's going to almost always, not 100% of the time, but the majority of the time, it's going to pull the individual stocks down with it. It's rare for individual stocks to move up versus the market unless they're already showing bullishness on the relative strength chart, okay? And again, same thing with altcoins. We see this all the time. Altcoins overreact to Bitcoin. If Bitcoin is bullish, if Bitcoin starts to move up, it's very, very common for altcoins to rally harder and faster than Bitcoin. If Bitcoin starts to go down, it's very, very common for alts to sell off harder and faster than Bitcoin. And so you always want to be checking what's Bitcoin doing before you start taking trades on altcoins. And you want to be checking what is my altcoin doing versus Bitcoin. Okay. So to kind of, put this in a step-by-step, A, you want to know what the overall index or the overall market is doing. B, you want to know what your asset is doing versus that index. And finally, C, you want to know what your asset is doing versus fiat currency. So I will go ahead and wrap the video up there. That way it's nice and bite-sized. I hope you all got a lot out of this. Again, if you enjoy these videos, make sure to give them a thumbs up and make sure to, comment and subscribe to the channel. I've kind of gotten to the point where I am being pulled in several directions. My excavation company is starting to grow, and that's starting to take a little bit more time. I'm starting to do some marketing and things for that. And then obviously I have my own trading, and I have my paying students as well inside of Discord and my software students, using my software, my indicators and things. So I noticed the other day I had done a post on Facebook. It got very, very little interaction. Same thing with these videos. They're getting a couple hundred views, probably, 100 of those are unique views. Most of them are watching the videos a couple times, and it's just weird to me because a few years ago when I knew far less, I was getting thousands and thousands of views in the videos. But, the difference is the market was bullish. Everybody was euphoric and happy, and money was raining from the skies. And now people are kind of like, they can't be bothered. And it's unfortunate because these are the times that you should be focused on the markets the most. These are the times where there are generational wealth opportunities that will probably appear in the very near future. And a lot of people are going to miss it. So I've got to start getting more interaction so that way the videos get a better reach. Because if not, I just can't justify the time in doing them. So again, if you enjoy it, if you find it helpful, obviously I'm not asking you to share something or do something. If you don't like it, then obviously I'm not telling you to like it. But if you do like it, and if you do find it helpful and you want more content, make sure you interact with these videos because it plays a huge role in how much content I create. And, of course, also remember that while I have been doing this now for over 6 years, I am still just some guy sitting in a spare bedroom. And that obviously means that I'm not a financial advisor. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, commodities, Forex, any tradable asset. Just go check with a professional. All right. I'll wrap up there. As always, this is James with Crypto Common Sense, again, aka 3 Peaks Trading. And please remember to trade safe.